Options traders have a lot to keep track of. Premiums, expiry dates, deltas, it can be enough to make your head spin. And with more decisions on interest rates on the horizon, how are you supposed to navigate the waters of an ever-changing interest rate environment? With row, of course. No, not row as in what you do in a boat. Rho, R-H-O, is an options Greek similar to delta or theta. It measures how much the options premium would change with a 1% move in the risk-free interest rate, often just referred to as interest rate. For example, if you hold a call option with a row of 0.5 and a premium of $1 and interest rates rise by 1%, the new premium would be $1.50. As interest rates will impact the cost of carrying options positions over time, it's important to note 3 ways that they interplay. 1, with all else being equal, when interest rates go up, call options usually get a little pricier, while put options tend to lose some value. The inverse is also true with interest rate decreases, generally driving call option prices down while put option prices increase. And 2, option prices are typically derived mainly from changes to implied volatility, or IV, as well as the underlying price. But for low volatility stock options such as banks or utilities, changes in interest rates can cause comparable price movements to implied volatility changes. However, not all low IV stocks react the same way, as banks typically see an increase when rates rise, while utilities generally sink. Now, you might be wondering how expiry dates fit into the equation. Well, the impact of interest rates actually depends on how far out your options expiry is. And that brings us to number 3. Options with longer expiry dates, for example, LEAPs, typically react more to interest rate changes than those with shorter ones. Why? The longer time horizon means more time for rate changes to influence the value of the option and show their ripple effects on the market. With a better grasp of how options move with interest rates, the waters ahead get easier to navigate. And just like in a boat, knowing the currents can be all the difference between smooth sailing and taking an unexpected dip. Thanks for tuning in. Make sure to like and subscribe for more trading and market content.
Have more questions? Check out the links to the right and in the description below.